The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach, dear friends. We're up 25 points on the S&P cash, 2.86 billion shares. So strong volume continues. And tell you what, high-frequency traders look like they've made their year here in the last week. A lot of action by the machines over the last few days. I suspect we're in a bottoming process here. As I said yesterday, I thought we were somewhere a little bit lower than here, maybe 1910 to 1970 and in a trading range for a little while. And I think we're probably going to see a nice little rip to the upside. A lot of shorts piling on stocks, probably a little too late to the party. And as I was telling a other trader today, some of the most vicious moves in markets I've seen ever in my life have been in the upside of a bear market. I forget what stock it was, but boy, it took out, this is before I was in the Tiger's Den. I was in another trading room. Some people may know it. I think it was run by a guy named Reverend Shark at the time. He may still be around. But there was some stock, I forget what it was. It was $400, went to $100 in a matter of weeks, went to $250 in like a day. And everybody was shorting it all the way down, wiped out a bunch of them. I never saw those traders come back again. That's the way that these markets and actual bears can be, and that is a little overbearing. And someone asked a question yesterday about covering shorts. I said, well, the old saying in the stock market is bulls make money and bears make money. Pigs get slaughtered. And not saying that you should, you should always be thinking about how things are going on in the market. And just know that no markets are straight up and no markets are straight down. And while we may have had a correction here, right now, my scans show more stocks testing lows with lighter volume than the last 2 years. It is hard for me to get incredibly bearish when I see that. Now, we talked 2-3 weeks ago, maybe 4 weeks ago now. I never can keep it straight. But we talked about all the stocks that were in the energy sector that had hit lows and continued on, did not break the lows with volume. And there is some school of thought that you can say those are false breakouts since they didn't get it at that time. I don't subscribe to that. If the volume comes in later, then that is it. But it at least probably takes a little bit of way. And I'm not surprised to think that we could see a second round of additional accommodation, as they like to say, at the Fed. And of course, normally when you see moves like we saw in China last night, which has caused a minor bounce in this market, 25 points as we speak today. And I think, what did we get back up there? About 1950, which was kind of resistance yesterday. There's a big school of thought that, especially when a market's on the run, you fire everything you can at it. If you're a big man in the street and you are already short, very interesting to see the movement out here. I just don't see, certainly the volume that we had the last 3 days, we're under that. But does that mean that we will not go back and test or retest the lows? And the question is mostly, what do the big men of Wall Street want? Do they want this market to settle down? Does the Fed want the market to settle down? And become at least a little bit more controllable. I think that's probably at least what the Fed wants. I don't know about the rest. But again, China lowered interest rates 0.25% last night, made a lot of things move, didn't make China's stocks any better. They were down fairly significantly. I think that quarter point came after the close, but I can't really see the number or the time that they actually put that out. But I don't think it really matters that much, or I would have gone and chased it down. In the meantime, we've got a lot of stuff going on in this market. And the first thing to do is get to our history today.
That it's all just a little bit of history repeating.
Today in 1921, the Dow Jones Industrial Average closes the day at $63.91. I'll say that again, $63.91, up a minuscule penny on a robust volume of 623,000 shares. No one knows it that day, but the biggest bull market of the 20th century has begun. By September 3rd, 1929, the Dow will peak at 381, almost 500% cumulative gain, or 24% annual return over the next 8 years. A great deal of that had to do with technology. Most people think of RCA as one of the first tech companies that really brought a change, a huge sea change in. And that was the first high margin product, really, I think, pretty much ever, that was expensive, over $5. Everything was fairly competitive, whether it was a paintbrush or wood or everything else. Everybody was in it. Building a radio was not child's play at that time. And of course, RCA had one of the finest engineers that will ever be in the United States. And he rode that all the way into television. But was it Sosnoff? I want to say Sosnoff. I don't know why I can't think of his name right now. But there were other companies. Most people don't know it, but those big radios ran on batteries. The next biggest company along through those years, Motorola, and most people don't know it. What did they do? They built a power supply that would run from the wall socket. And I can't imagine batteries lasted that long in those big things with those tubes burning hugely and brightly, long before the days of transistors. But mostly what kicked off that early 1921 movement was technology. It was the radio. And I stare at my radio very often. But I don't. You always see these pictures in 1925 of people staring at the radio, or during the Second World War, staring at the radio. You don't really need to stare at it. Although they were kind of beautiful things with lots of wood and beautiful devices. In fact, I would have liked to buy one and restore one. I saw a video on YouTube about it. But I have meandered off the course of my chosen speech for far too long here. I could have said I've digressed, but then the hate mail would start. Anyway, we are going to continue here. We've got other things going on in this world. Schlumberger, I find it very interesting that apparently these guys can't jump on hand grenades fast enough. They've been trying to get back into Russia and trying to get into a Eurasian drilling company, the largest provider of onshore drilling services for Russia, for $1.7 billion. But the FSB, which is kind of like the FBI if they were the CIA and the FBI put together, the successor of the KGB, is reportedly holding up the 46% stake and acquisition over concerns that Schlumberger would have too much influence in Russia's oil services market. You can read this, that someone hasn't been paid off, and two, Schlumberger have to be incredibly, monstrously huge morons to get involved with Putin, who will just take everything that they put in there away. But I don't know. Can it just be so much money that people throw caution to the wind and believe that this time it will be different? Two people familiar with the matter have asked not to be identified, told Bloomberg. They best not be Russians or living over there. But a lot of things wrong with that story. And, of course, with stocks in the energy sector pretty much at lows, could these guys just be taken out and beaten severely around the head and not see any effect whatsoever if they would buy into Putin's deal over there now? I just think maybe they just got a kick me sign on the back of them. At least one man's opinion on stupid things happening. Other things going on. We've got a few earnings out this week. Best Buy, of course, came out this morning. It was up a little bit this morning. It was okay. It was up about $4 or so. Of course, it had been down fairly strongly. They came out and told everybody they had everything. They'd be selling Apple Watches soon. And, of course, since those aren't selling, I didn't know what the big attraction was there. But they had a bunch of other things going on, and sales were at least okay. I'm a frequent visitor to Best Buy, as it's the last electronics company open, at least anywhere that I know of in this area. I'd have to go up to Orlando from Tampa to get anybody that would actually sell me some solder or anything else that I couldn't get at the Home Depot. But, at least they have a few things. If things are really tough, Amazon has same-day shipping. If I pay an extra $5 or so on most devices, which is probably worth it if I need it today, do I really go to Best Buy or just throw the $5 at it and know that it'll be here about 6:30 or 7 o'clock at night on a light drop-off? Anyway, a lot of very happy talk from Best Buy. I'm not buying it. They need a new product for this fall to really get things going. Maybe it's those 4K resolution televisions. I see a lot of people talking about how those are getting traction. I just don't see the delivery mechanism and or the DVDs with 4K resolution actually making their way to the market probably before November. Now, maybe these things come out a little bit sooner, but last I've heard, they're not going to have anything till November, which would mean that this next quarter is going to be probably devoid of a lot of 4K televisions. Also, a lot of discussion out of Taiwan is how much the price is going down on these 4K televisions already for Christmas. I think this is a momentary bounce in Best Buy that probably, until those 4Ks really start selling hot, until we started seeing DVDs with the higher resolution, probably not a big deal. We will be back in just a few moments. You have plenty of time to give me a call at 877-927-6648. Email me at path@tfnn.com or post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And I just wanted to look at something real quick. So hang on just a second. Oh, there it is. Just wanted to make sure I had it up. Toll Brothers was out with earnings also this morning. They missed. The largest U.S. homes builder reported lower than expected third quarter revenues. A lull in demand last year meant that it handed over fewer homes in the quarter, and the company narrowed its 2015 home sales forecast. I've been rather bearish at these highs, or the recent highs, in home builders, thinking that we probably had hit some kind of high. And it looked pretty muddy here. I don't think it's as clear as I thought it might be, but it certainly looks like it continues to be problematic. When we look at some of the others out here, let's see, what did I do with that? I think I made that my new button. Hang on a second. Where's my new button? There it is. Well, started opening a whole bunch of these. Hang on a second. Come on, where are you at? Oh, there you are. No wonder I was dazed and confused. Let's take a quick look at this. Toll. You know, we were talking about this just before the market broke. I thought they'd come back in the trading range. Of course, they came back with a vengeance and heavy volume. $35.03 is the next support level from May 6th of this year. But 5.4 million shares already probably tells you a great deal. I wanted to look at Home Depot because after its earnings last week, and see how it was doing. Of course, a lot of these stocks are kind of broken, or at least the ticks on them are. Don't know if any of them are real or sort of real or kind of real. But a little off, I think, on that news today. Home Depot opened up and it sold off like a great deal of the market. But I don't think that there's a whole lot else in that. Let's take a look at Lowe's real quick. Lowe's. You know, pretty much the same chart on this one out here. But, yeah, I think that they were kind of overbought to begin with. Anyway, not a whole lot more coming out, but I'm going to be watching these over the next few days. There's a lot of discussion about how the far end of the yield curve and the narrow end of the yield curve will actually move. And a lot of this discussion about finances and about the amount of cash that can go into new home loans is also under discussion. Everybody just thought that as interest rates went up, of course, the financials would too. A lot of discussions about that, the Fed not being able to control the back end of the yield curve, and that if these yields kind of invert, there will be a huge problem for the financials. And of course, maybe we're seeing at least the first part of that in weakness in Homes and HD and Lowe's and some of the others over the next few days. But we'll have to see how these guys coming in. Had a email, and it's from Trung. He says, hi, Dave. Hi, Trung. Is natural gas getting close to a buy? Well, I thought it pretty much was. But to tell you the truth, I think that it's probably going to be a slow slug for a while. I'm putting my concentrations into other things. If you wanted to get long it as a trade against the general market, it's hard for me to say no. I think that we've seen a bottom in probably a lot of the energies, or we're very close to a bottom in the energies. I like the way that some of the other commodity stocks are starting to trade. I was talking to Andy Heck before the show about SCCO, and there are a lot of these stocks out here that did not look that bad when they were testing previous lows out here in the commodity space. Now, I know energy is not commodities, but for some of these stocks that have been brutalized, brutalized is a neat word, isn't it? Thumped, beaten like a red-headed stepchild, treated like a baby seal on an ice floe. This actually did exactly what I was talking about. So many stocks in my scans from yesterday showed, and that is tested its previous low on a lighter volume. Did the energy really come off in this last leg down? It wasn't lighter. I'm not suspecting this thing goes right back up to 33. But what I am saying is that at least there is a good chance that a lot of these commodities, ex-gold, I think, has some very interesting moves in it. 8.2 million shares compared to 5.7 million shares. And again, like I said, great deal of the volume looks to be machine-driven over the last couple of days. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And you can email me just like Trung did about natural gas. But yeah, I don't think it's a bad trade. But to me, I think there are some rocket ships out here that are in equities and have nothing to do with commodities that I'm focusing on. Doesn't mean that I'm right. I just think that there are probably some bigger moves out here. One of the reasons why I think that there's more afoot to this game than anything else is the dollar. It closed below 93.30, the previous low, popped right back in to the trading range, didn't give it much time, and we have held fairly steady at 94.50s pretty much all day long after the open. You had a nice run there right after 10 a.m. But that has kind of put a hurt on, of course, some of these stocks. When we look at the ones that I was looking at, where's it at? Because I sent something out at here. Sent. Where's my sent mail? There's my sent mail. Okay. GDXJ. GDXJ. I've not been a huge fan of the miners. And, you know, you had a nice bounce off the 1792 level not that long ago. Let's get a little closer out here. What I am watching is a kind of make or break for what looks like a fairly decent move in the GDXJ, and that is an AB or a possible ABC down. It was down a little bit farther today. Volumes come off it a bit, but it certainly looks to me like we're kind of back down in this trading range that load on July 24th. If I was to want to get bullish, I would really like to see a very light volume and a test of 1792 yet again. It has not been tested. Volume is light out here, though, and light and variable, 5.6 million shares. Yesterday, of course, almost 22 million shares down, which gives you a lot of indication. But I could see this kind of meander out here and come back into this low, which will probably do one or two things: test it with very light volume and or break it with higher volume. The downside breaking it with higher volume is a very well-formed ABC down that would take you to $13.37. So keep a close eye on that. I am the camp of deflation. Without it, it is hard for me to see how gold goes much higher. And of course, it was off 1.5% earlier. I had not seen a great deal of it. As we come back, we're at 1920 on the S&P cash, up 26 points, 3.12 billion shares. Going to look at some of the other stocks. I had a mountain of stocks in the newsletter this morning that looked prime for a fairly significant bounce. Tableau Software was one of them, and the reason why is that this went through the July 29th low at $97.11. That day had a lot of volume, and that was about 11 million shares. Yesterday, we went below it, kind of closed right back at the bottom of it yesterday with 1.7 million shares. Anytime you blow through a low and you only get 20% of the volume, it always attracts my attention. Even some of the penny stocks out here that you think would be giving up the ghost were not. Ballard Power Systems, another one testing a very high volume low. If you're into the penny stocks, the July 8th low at $1.21, 8.5 million shares with 860,000 shares yesterday. For a penny stock, that's a fairly decent move. Now, part of this, I suspect, is SCTY, right? Is the market manipulation that Mr. Elon Musk is back into. He started it yesterday in Solar City. He said he was buying huge amounts of shares after probably one of the premier short figures in the street came out and said that he was highly short this thing, probably in the 56s or 7s from filings. It looks like when this thing was going sideways back up here, he was getting short. And of course, that guy, now I'm forgetting his name. We brought him up on Friday. Mr. Enron, he shorted Enron. I'll think of his name in a minute. Yeah, Mr. Jim Chanos. I just have these mental blanks now. Yeah, probably should stop sniffing that glue. Anyway, Solar City, he came out, and of course, that was one of the reasons why this hugely turned around. One of the other things that you should be aware of is Mr. Elon Musk is going to be going on the first night of the new, well, it's not the Daily Show, but it's the new show that comes on at 11:30 after the regular show, or is it he in the new 10:30 slot? I don't know. Anyway, the guy that used to act like he was a conservative talk show host after on Comedy Central. Someone will probably tell me his name, too. I didn't watch him. His first host will be a bunch of these people in high tech. And normally that's enough to get probably the less well-educated of traders. Yeah, Stephen Colbert. He would, so you're going to have to keep an eye out. But it looks like a lot of his guests at the very beginning are going to be these big guys of Silicon Valley. So normally you get a lot of people that dive in stupidly into these stocks. But Solar City, he made at least Mr. Chanos made an excellent case on Friday on why he's short. And this is not a guy that goes in and out lightly. He is a bulldog. When he gets a hold of a stock, he's in it and short for a year, 2 years, until the reality comes out. I suspect, and we've talked about it for a while, he brought up some of the issues with it. But I think the issue that he didn't bring up, but he knows well, is that Solar City is going to run out of time and out of money from the government. As we've talked about, there is little appetite for the Republican-controlled Congress right now to re-up all these solar subsidies, especially when so much of the money went back into re-electing people from the other side of the fence. Now, before you get too wound up, the same thing happened before when the Republicans were pushing all these fuel cell companies. So it's nothing new. The difference is that this was on probably 10 times the scale of all the Ballard Powers and other plug companies on it. And I think a ripe target politically out here. So I don't think that there's much chance. Probably about the idea lasts as long as a snowball on Georgia asphalt today, because it is hot. But that is it. Yeah. Anyway, I don't think any of that cash is actually getting to those guys. If there's one thing that is abundantly clear, there's somebody in the Den posted something about an executive action. If there's one thing that the Supreme Court looks at is sacrosanct, is that Congress has the purse strings for all. And that's never been in doubt. Any of these executive actions, while may make good press, will never see the light of a greenback unless there's a bunch of slush money laying around up there. But interesting nonetheless. But anyway, Solar City, nice bounce yesterday, kind of a pullback today. Again, we're kind of going into this bottoming process. And a lot of people probably think, well, we're not going to bottom. We've got to go test these lows. And I think we test the lows. I just think it's 2 or 3 months from now. I don't think that there's this instant everything or nothing to the market. And I've watched, even in the worst rout right after 2000, it took till about mid-March before the market turned back down again in 2000. So that was about 3 months. And, could this market continue to rally and push higher for 2-3 more months? I mean, the dot-com bounce was stocks that were totally bogus. These things never made any money. They weren't ever going to make any money. A lot of these stocks that we're talking about today, not Solar City, although I don't think it makes money other than its government subsidies. A lot of the stocks that we're talking about today are not total frauds, which they were in 2000. And my guess is that I think we can probably give the stocks that actually make money, even if they're overpriced, at least a little bit of room out here to run before they start their next leg down. But as we said, in 2000, it was that mid-March, before the market really, the wheels started to come off. But the Qualcomms and a lot of those stocks, they were blowing apart the day after New Year's. And I suspect that much like then, we're probably going to have a lot of consolidation. We're going to have a lot of distribution. And it's not all going to happen in the next week or two. At least that's my call for now. But anyway, we will keep an eye on it. 1920 on the S&P cash. It's starting to kind of quiet down here a little bit. Again, more than anything else, it's the last 30 minutes. And what these big men of Wall Street decide to do. Do they come in and buy, or do they come in and sell? If they are buying, they would probably want this market to be flat for a few days so that they could quietly buy up shares instead of massively stomp in and drive the price up. So everybody has to pay higher. Now, one other feature that we need to be thinking about as we go through this week is this is the 25th. Fund buying will come back. It starts on this Friday. So, it's one thing to think about the markets that just can't change anything. But if you're long these stocks, you're a big man of Wall Street, you're probably thinking, man, if I can get it to the 28th, then maybe I can sell into these funds buying. And that's kind of the bearish case. The bullish case is we'll jam this thing up so the funds have to buy once again at the highs. A sucker never gets an even break on Wall Street. But that would take us through the second. And with a very light and quiet market that I'm expecting finally as we go into the end of the year, that would be different. There's also one other thing that I'm looking at, and of course, that is the movement of stocks prior to the 3-day weekend. If we were looking for the market to really significantly move down, I suspect that that is the next logical point to think that this market really is going to sell off. If we were looking at dates, I would look at when we come back on the 8th of September. I think we could either go sideways or have a significant rally between now and then. But there is a fairly high statistical significance to having a market change in the market when we come back after those 3-day weekends. And that would take us into September 8th. So just a few things to think about it. And put that in your pipe and smoke it, as they used to say. But a lot of discussions about Trump in the den today. He is one good thing. He is able to generate free press. KKD out here. Krispy Kreme donuts. Donuts. Has not tested with lighter volume. Got back in the consolidation zone of May 26th. But not a bad company. And, of course, if they get their hooks into you, you will be there all the time. But for a stock that's kind of pulled back off of its highs, this one's kind of interesting. I would still want to see more test of the low on lighter volume. But for a market that blew apart over the last few days, sometimes a tie is good enough. When we look at some of the other things, talking about LNG, Cheniere, one of the reasons I would have been a little bit more bullish on natural gas today is if we wouldn't have gotten a lot of reversal on Cheniere. LNG did get up to $62.69 today on 2 million shares, which is kind of light volume. That tells me that we continue to see a tepid market for it. Not probably, I know that this is not natural gas, but I have a feeling that when natural gas does and becomes a thing, it will probably be a test of this August 24th low yesterday at $54.50. I would love for this to come back and test it over maybe the next 2 or 3 days on very light volume. But so far, no big deal. Mercado Libre. When we come back, the stock's been in free fall for a little while. I wanted to look at a little longer term in this chart. I'm going to turn my text back on. Anyway, give me a call, 877-927-6648. Email me at path@tfnn.com or post a message in the den.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Market looks rather interesting out here. 1926 on the S&P cash. Volume continues to be strong, 3.3 billion shares on the New York Consolidated Tape. We'll see how this comes out, but I'm pretty happy with the day, thinking we're probably basing out for a B to C leg that probably will take a while in this market. At least what I'm thinking of. Now, of course, a lot of it depends on the end of the day, and so we go to our correspondent, Jack Plants.
They ain't over yet.
And no, it is not. It is not over yet. We were talking to Mercado Libre, and it is MELI, the symbol if you're not familiar with it. But there's a lot of stocks out there that charts look beautiful. I know that the indexes look horrible, but there are a ton of stocks. I think I had 45. I may have 45 charts, or maybe 45 pages of charts in this morning's newsletter of stocks that I thought were incredibly interesting out here, and that they made very, very good patterns. This was one of them, and made me think that at least probably part of the destruction that was happening in third world markets was over, at least for the meantime. This thing gapped up on significant volume of 3 million shares back on, September 8th of 2014. And of course, They tested it with just a drop of volume yesterday with 440,000 shares. It's back into the trading range. And a great deal of these stocks did that. They came down on horrifically huge volume. This thing is trading at 2/3 of its price of just May 4th. And so the destruction's in there. If you're thinking this company goes out of business, it's one thing. If you're thinking that you couldn't get a monster bounce to 130, that's another. But like I said, a ton of stocks out here doing it. We've got Leanne asking about Loco, L-O-C-O. So let's take a quick look at that. I don't see anything out here that would technically say that there's anything in it. Of course, this was an IPO. What you would want is a retest of the low, which is $10.25. And I would say that would probably, even though you came down here with a light volume, that's kind of what you need. You need your back against the wall. From what I hear, not a bad company, but they sold themselves as CMG, Chipotle, and not quite. But, if this thing would base out for a little while, if you saw some signs of someone coming in here and supporting the stock or trying to buy it, you'd probably want the stock to go sideways for 5-10 days. And I mean, candles like this, not much movement over. And that means that maybe there's somebody in there with a bid that is buying this thing. And then eventually you'll see them move it up as soon as they're done. But as far as I'm concerned, right now, no signal on El Poco Loco as one of the stocks out here that we should look at. Anyway, we've got a market that will be anything but violent. I am buying. Yesterday, I was buying out of the money calls into all the dips. I sold some of them. I've kept some of them. I think we've got a super high likelihood that we at least see something like 1970 on the S&P cash. That test may tell us in the next couple of days what we should expect after that. Options are probably going to be a losing proposition very soon as premiums implode on the way up and premiums for puts expand on the way down to the point where you probably won't make money. So it's all about buying cheap stocks and shorting the equities now. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.